Top Glove Corp rebounded strongly today to close 16.7% higher at RM22.98 for a market capitalization of RM61.98 billion. It was the market's top gainer with over 56 million shares changing hands. This follows a shaky Thursday where the counter came under pressure after the glove maker confirmed that the US Customs had slapped a detention order on products by its subsidiaries. The group said the action may be related to foreign labour issues, particularly recruitment fees paid by migrant workers to employment agents, which were done without the group's knowledge. Compounding matters was a technical glitch at Bursa Malaysia, which led to a revision of its closing price from RM21.24 to RM19.70. Analysts seem to shrug off the news, with CGSCIMB saying that the acute global glove shortage means it will be easy for the group to find a market elsewhere. Kenanga Research expects the issue to be resolved amicably, while MIDF Research is keeping its forecast. After a technical glitch halted trading yesterday, Bursa Malaysia said that it has revised the KLCI's July 16 closing value from 1,573.31 to 1,565 points. This was after adjusting Top Glove's closing price from RM21.24 to RM19.70. As such, the reference price for all stocks today is the previous day's closing price, although exception has been made for Can 1, whose price has been adjusted lower to RM268 from RM274 after factoring in dividend. Bursa also assured the market that Thursday's disruption was caused by a technical issue and not by cybersecurity breaches. In a statement, CEO Datuk Muhammad Umar Swift offered a mea culpa for the interruption, adding that Bursa is working together with its partner Nasdaq to prevent similar issues from repeating. The FBM KLCI seemed to shake off yesterday's abrupt halt, closing 23.02 points or 1.46% higher at 1,596.33 points. Bowstead Holdings today unveiled its transformation plan, which aims to drive the group forward for the next 3 years. In a statement today, the conglomerate said the plan, dubbed Edge 20, comprises 20 transformation initiatives to achieve the group's aspirations, focusing on funding, structural, operational, as well as corporate governance areas. Chairman Datuk Sri Mohammad Khalid Nordin says the first phase will see the restructuring of the group and its subsidiaries in order to optimize value and stay resilient in the face of challenges ahead. He added that a group transformation office has also been set up to drive the transformation efforts across the group while providing strategic input for its business units. X1 MDB CEO Datuk Sharul Azral Ibrahim Halmi told the Kuala Lumpur High Court today that he was not briefed about the 5.75% interest on the fund's issuance of the $1.75 billion bond that was arranged by Goldman Sachs in 2012. Sharul admitted that he did not check the rate as he thought the matter was a done deal and that the rate was determined by higher-ups. The revelations were made during a cross-examination by defence lawyer Wan Aizuddin Wan Mohammed in the trial of ex-PM Datuk Sri Najib Razak, who is facing corruption and money laundering charges. Sharul also agreed that even a 1% interest variance could have made a huge difference on what 1MDB would have to repay to redeem the 10-year bond notes issued to part-finance the acquisition of Genting Sanian Power. A calculation by Wan Aizuddin based on the interest rate showed that 1MDB would have to fork out $2.9 billion, while Goldman Sachs would pocket $188 million in commission. Naim Holdings' wholly owned petrochemical hub is selling 2 parcels of vacant land measuring 405.6 hectares in Bintulu to the Sarawak Economic Development Corp for RM340 million cash. This, Naim says, would allow it to unlock the value of the assets and pay dividends to its shareholders. According to its statement to the bourse, the lands sit within the Kidurong industrial area with a 99-year tenure set to expire on November 2112. Besides rewarding its shareholders, NIME says it intends to use the proceeds from the disposal for working capital for its upcoming development of some 2,500 affordable and intelligent homes in the next 5 years and also reduce its debts. The group expects to gain about 115.81 million ringgit from the disposal, which should be completed in the third quarter of 2020, thus contributing positively to its FY20 earnings.